Good afternoon, everyone. It is our pleasure to be here today amongst you to talk about a very interesting topic close to my heart, which is the private equity industry here in India, as well as that globally. So without much further ado, I will dive into our first question. Gentlemen, it will be wonderful to hear from you on what you think is the good, bad, and ugly of the Indian opportunity landscape here in India with respect to private equity. And we'll have two different views on this. Kamal and Sandeep can sort of provide us with a view of the outside world looking in, and then we can have more of a domestic view on what really is happening with the Indian private equity ecosystem. So Kamal, could I hand the mic over to you?
I think everybody can hear me. These things are loud. I'll be quick. I think from my perspective, there are two things. I'll start with the good. So India as a space for private equity is really fertile ground. Because if you think about India, it is a country of entrepreneurs. And one of the things that attracts, whether it's private equity or private credit, is the ability to work with entrepreneurs, and whether you're doing a restructuring or providing them capital to grow. So as a space, as a country, it's always been a good destination. I think the big change that's happening in India now is, on last count, there were roughly 500 plus PE firms in India, is now there are firms at sort of the large size and the mid size, which allows a lot of industry to participate. So I think that's on the positive note. Another thing that I think has happened in India is more recently with the changes in sort of the bankruptcy and insolvency code, the true growth of the private credit market, where you can actually restructure companies on a faster track, has been key, because when you operate in private markets, you need an ability to both grow firms, but also restructure them out, and it was very difficult to restructure. So with that change that the government instituted, I think it's really made it a better place to operate from a private capital standpoint.
Sandeep, we'll be interested to get your view coming from London today.
No, I think India as a destination is always a very attractive place, and the private equity market here is growing apace. I think personally where I feel that there is a little ground to be made up is at the lower end of the private equity sector, where you find that the vast majority of the private equity players in the market are sort of interested only in the bigger ticket items, 25 million, 50 million plus. And I think that there is a bit of a gap at the moment for players to come into the market which are slightly at the lower scale. But that's an equalizing sort of evolution that will happen over a period of time. But once that does occur, then I think the whole sector will just take off, because then you'll have participants that are very specialist across the life cycle of businesses, across all the various quantums, and that's when you'll actually really get very accelerated uptick.
Rashi, you're the lawyer here. Can you tell us a bit more about the bad and the ugly side of the business?
Yeah, so, it's a very broad question to begin with, as diverse a question as India is. But I think there are lots of good that private equity world has seen over the last year or so. And I think a lot of that is driven by a few key drivers. I think one of them is clearly entrepreneurship, a younger population that's coming in, and their desire to find disruptive solutions to the country. So entrepreneurship is certainly what has helped generally the private equity market. The other good thing about private equity market, in some ways, it's a blessing in disguise, is that because of the liquidity crunch that the country is facing, particularly from the banks having issues as well as NBFCs having issues, you're beginning to see a lot more traction towards private equity. So there is a trend that you're beginning to see where private equity capital is truly considered as an excellent alternative, if you would. And so I think generally 2019-20 sort of forecasting it forward, it appears that these factors will have a certain level of momentum and they will carry through for the next few years. I think the big challenge, and I won't say there are any sort of middle bads. Private equity is usually a very extreme set of either it's good or it's ugly. And the ugliness of what I think the private equity side faces is some of the usuals that you find. Particularly, the big one is the exits. And I think the big ugliness that comes is that you often find that private equity tends to come with a certain culture from the West. And private equity has to learn about India. India, the business gestation periods do not necessarily match the terms of the funds that get created. And that's sort of picked up from what I would call as global trends. Having private equity in mature markets and having private equity in emerging markets, particularly when you're talking about China and India, is a very different ballgame. And the biggest problem that you have is the gap in expectation. When it comes to taking money, all the entrepreneurs do need money, as I said, because of the, it's a good source of capital. But when it comes to an expectation of exits in 5 years or maybe 7 years, the gestation periods are far longer in this country, particularly because of a lot of regulations. You see a lot of delays that happen as a result of that. The other big factor, which I think I sort of put it into the ugly factor, but it's an important factor, is the talent. The talent is becoming, as much as we have 1.2 billion people, I think it's sort of perplexing that how could you not have talent in such a large country? And some of that I have wondered myself, being a lawyer who actually practiced in New York for almost about 18 years and came back to India and taken on the challenge to be actually of assistance to private equity, but at the same time building a full-service firm here. One of the things I find talent is a very big challenge, primarily because I think the driver for that is there is no investment in training. And so that becomes a very important aspect, that if you want, it's not just capital is one source, labor is the other source. If these two don't work together, the industry is not, you're not going to get good results, whether that's the economy or whether that's private equity.
Ashish?
Okay. As far as India is concerned, and I'm listening to fellow panelists here, I think private equity in India has been here for about 25 years. I remember in my early days as a young banker in 1994, there was a firm called Alliance, and it was tracking a large pharma company. Then you had Warburg Pincus investing in 1999 in Bharti. So 20 years, they had a decent exit, and so have most of the private equity transactions. In India, the total investment in private equity has been 90 billion so far. In China, it's about 300 billion, and US is, of course, the number is very high. But having said that, in context, the Indian number is equal to that of in Japan and South Korea. And why is that? Because in Japan and South Korea, you have adequate source of capital within the system in the country itself, which satisfies capital requirement of capital. In India, we are short. So private equity has come as, a bonus, or rather the only alternative. It's not, it is the point you go to first when you need a, capital requirement of a ticket size with minimum about $25 million or so. So today in India, as one of my fellow panelists said, there are about 500 private equity firms, and going forward, it's only looking bigger and bigger. What have they done to the Indian system? They have made organizations which were, earlier only dealing with local institutions who are raising capital, more aware of the global system, the governance that is required when you have a private equity investor. So the corporates are getting more and more, institutionalized in terms of what they should practice and what they shouldn't. What has happened with that is there's a lot of capital flowing for the same transaction, and therefore it becomes a little more competitive. The I can't think of anything wrong that has happened or anything that is bad in terms of private equity coming into India, and therefore, it's got somewhat affected. From the M&A point of view, if you were a corporate and if you were looking at acquiring companies, private equity becomes a large competition, and therefore that's a deterrent for them. Otherwise, it's all gung-ho as far as India is concerned.
Thank you. My next question is going to pick up from something, Sandeep, you kind of alluded to in your answer, where you said that you felt that there was a gap in the market where a certain ticket size wasn't getting funded. Picking up on that, here's a larger question. Do you believe that the private equity ecosystem is doing enough to promote entrepreneurship? And I ask this question because sometimes as a PE investor, we have certain constraints that we're looking at while looking at portfolio companies. We have finite timelines, certain expectations in terms of returns. Keeping all those constraints in mind, do you think this industry is doing enough to promote entrepreneurship?
I'm not entirely sure that you can make the private equity sector responsible for entrepreneurship. I think that it's a supply and demand situation. If there is enough demand where entrepreneurs are really lacking in appropriate funding, private equity guys will veer towards that and they will try to plug a gap. So I think that it has to be demand-led. But I think that also that will happen. And over the last couple of years, you've seen a couple of, maybe a handful of firms who are now targeting this particular sector. And that will only grow. But as a banker, I would say, bankers don't want responsibility for grassroots change. It's not really their, they don't want that. They don't want to take that upon their shoulders. What they want to be able to do is that where there is demand and where there are opportunities, and if those opportunities are ones that they believe that they will be able to benefit from, then of course, naturally, they will gravitate towards that and fill the gap.
Ashish, you're the other banker on this panel. Do you have a slightly different view, or do you agree with Sandeep?
Partly agree and partly don't, and that's how it is. Sizes of transaction have matured. When private equity came to India, I remember CDC doing a $6 million deal or somewhere there, $4 million deal. Now, from that time, but India being a growth market, all private equity investors have been able to raise money on the India story, and therefore they are looking for larger ticket size. Probably the kind of private equity firms that come to India are larger in relation to the other, private equity companies which may be in their home countries. And the other problem is exits in India. Okay, here in India, difficult. Someone, Rashi, I think, raise a point of exit. How do you exit? There are two exits. One is IPO or the other is strategic. Strategic, in fact, is very difficult if you have a very small business, there are no buyers to take it. And IPO, you can't do a small IPO in India. Therefore, there are difficulties in doing a small private equity deal in India. Having said that, that's a market and we can look at other alternatives of exit and, someday come up with some plan and look for firms to come and look at smaller capital private equity deals.
Without really expressing your political views, it would be helpful to sort of hear from our panelists on what they believe is going to be some of the concerns for this industry as we look at the national elections. And perhaps in addition to concerns, I think expectations and what we can look forward to over the next couple of months. Rashi, would you want to take that from me, please?
Well, I thank you for making sure that it's politically neutral. As a lawyer, I have to stay in the middle of the aisle, I think the election in some ways this year is going to be disruptive because whenever you have elections, the issue, and particularly with a lot of people expressing, and people could be on either side of my statement, the chances of having a clean majority of one of the parties versus having a coalition is certainly what creates volatility in the market. But at the same time, from an entrepreneur perspective, which is what drives private equity, what you find is entrepreneurs and private equity in these times tend to sort of pause and see where things how they will shape up. I think there are two factors. Elections is certainly one aspect of it, but also globally, if you see, which is where the capital raises are happening, there is a lot of uncertainty right now. You see that in the UK, you see a lot of movement in the European Union. You certainly see trade wars between US and China. You're beginning to also see some of the trade issues pumped up as a result of trade barriers that are being put. And if you combine all of that, my sense is that these elections are creating a little more uncertainty. Having said that, one of the things that will be a good outcome of all of this is, as I said to you, it's a twin factor. The fact that there is a liquidity crunch happening in the market and a need for capital is certainly going to drive the valuations to a more realistic level. One of the big challenges in India has always been valuation. What the perception of valuation is with old families who actually ran business for generations versus what is the perception of valuation. And I think we are beginning to see, in fact, some of the indicators are suggesting that the values at which people are exiting are actually almost equalizing to the value at which people are investing. And that's usually a sign of a mature market. So, in that sense, I think we're going to get more realistic valuations, but coupled with a lot more caution.
Kamal, I know you bring an outside perspective on this. As we move into the elections and get closer to that, do you think it's going to be positive for capital flow coming into the country, or are you nervous about how this is going to play out over the next couple of months?
I think the sense outside is India is in a very strong secular long-term trend of a bullish tone, in the sense that if you look in the world, India occupies a very unique sort of situation. When you look at the West, the demographic patterns aren't positive from an age perspective and a GDP perspective. So for them, India is a natural partner when you want to grow as a nation. I think the democratic system in India is a wonderful comfort from where I come from. Something like a US looks at that. But the point I want to make, maybe away from the elections, is something Rashi picked up, is I think India's biggest challenge in the medium and long term is really India needs better managers. The growth in this country generally across a lot of places is going to stall, because what you have is, I think, a bad trend of a lot of unskilled talent and not lifelong learning. I'll give you an example. Rashi pointed out there is a sense that everybody wants a quick exit in India. I've been sort of disheartened that it's even happening in the education sector. I see young kids, I'm a product, I was blessed by a great education system here, but I've worked abroad for a long time, and even today I'm expected to spend a substantial portion of my time in learning and development and making sure my managers are constantly learning. And I sense in India, people who go to schools or graduate schools, they all want a quick exit. And the problem the nation faces is you have this quantum of people very eager, very young, but they are never becoming good managers. And for the nation to grow, you want to invest in your talent that's in the middle stages. You want better managers, and that takes patience and a commitment. And if that doesn't happen, then you have a real issue long term, because that's what runs a country. You need good managers.
Ashish, you sort of are at the, really at the pulse of this. Just picking up from what Kamal said, where do you sort of see the key trends playing out in this industry of the next couple of years? I mean, Kamal talked about creating the next level of managers. We've sort of talked about exits being difficult, but we've also talked about how things are improving. So where do you sort of see this industry playing out over the next couple of years in terms of key trends, perhaps challenges or things that you're optimistic about?
Okay. As far as challenges are concerned, again, as some of the panelists here discussed about management. So when PE goes to buy, do a buyout fund tries to buy, they usually have to depend on the same management which was handling the business, because there's not a dearth of manager which comes to the PEs and say, okay, we are here to be your partners in the business and take it forward. So that is kind of missing in India. But having said that, there's a lot of work being done where PE firms are taking advisors, maybe at a senior level, and then going down the line to look at, the talent to come in. And then there are a few management services companies which are coming out to provide these managerial skills, who have within their system a lot of experts, who then they lend to the Ps, and then they come to run the business. But I think his point was more generic in terms of good managers. The point is, Kamal, here people, there are more promoter-driven companies, and therefore it's gone from one generation to the other. But now that ratio has changed dramatically over the last 20, 30 years, and you have a decent set of managers in India who are actually going overseas and then coming back here to do business. So that, I don't think, will remain a challenge in India, because you have a lot of young population in India, educated, skilled, aspirational, all those. The larger channel will be looking at the kind of transaction speeds we're getting earlier. Okay, and there comes a point of valuation, and the valuation expectation. In any transaction, in any good transaction, there are at least 5 Ps vying with each other. So therefore, the value expectation of the promoters goes up, and that will be a challenge, because their exits will become difficult. They're expecting money on invested capital at 2.5, 3 times, and if they start getting 1.5 times, the funds will start drying up. Thank you.
And I'd like to really thank our panelists, Arshia as well, for moderating this session.